oil is dropping. And when the price of oil drops, it gives a lot of value to the dollar also.
Yeah.
So basically, we're getting a lot of currencies actually being traded. They tried the euro, the US dollars.
Okay, now that you've mentioned that, let's go right into that. Let's refresh our minds a little on what trading strategy is. And do all traders have to use the same strategy?
Now, if you, like for those that have been following us, we've spoken about a lot of, not strategies, but tools.
Tools, yeah.
That are used to trade. We've talked about pivot points, we've talked about Fibonacci, we've talked about moving averages, candlesticks, oscillators. We've spoken about quite some. So what we're going to be doing this season is to tie a lot of these tools together to form what we call a strategy. A strategy is a combination of tools that you use to achieve a trade decision. Typical example, let me not use flight, let's use fishing.
Okay.
Depending on the kind of fish you catch as a fisherman, you need a strategy. For instance, there are fishes that you don't catch in freshwater, you catch them in salt water. So you need a different strategy. You don't go to saltwater, the ocean, for instance, with small boats. So in the same way, fishermen have strategies to catch different fishes. The same way traders have different strategies for making different kinds of profits on the market. So that's what a strategy is, just a set of rules that you use to combine your tools together to make a trade decision. So
what would be the major tools that a trader would need for the strategy setup?
Okay, now I'm going to be showing us a simple trend trading strategy. And for this strategy, you're going to be needing the moving average. The moving average is it's one of the simplest tools, one of the things you learn first as a currency trader. That's what you learn first, moving average. And what it does is that instead of you looking at price over time, as let's say candles or and you have them going in zigzag manner, when you plot a moving average, what it does is it's able to straighten out price and you can see it better. So we're going to be using the moving average. Then we're going to be using an oscillator also called moving average convergence divergence, MACD for short. So those are the two major tools we're going to be using for this simple trend trading strategy.
Okay, now what is the second setup that you see using this particular strategy?
So let's start by looking at, because you're trying to trade a trend, so let's look at Euro USD chart, for instance, a daily chart from January 2011 to from November 2011 to January 2012. Okay, that's it. If you look at it, Euro USD was in a big downtrend throughout that period.
Was there any particular factor?
Fundamentally or technically?
Fundamentally, market news.
I'm sure fundamentally, the Eurozone problem we're talking about
obviously, yes,
was a major factor behind. From November last year to January this year, we had a big downtrend on the euro.
And it affected the dollar negatively?
No, positively. It was positive for the dollar, negative for the euro. Because when you're looking at Euro USD chart, the euro is the major currency there. So when there's a downtrend on that, it means the euro is losing and the dollar is gaining. So that is what we are looking at right now. So what I'm going to show us is how you can actually trade this trend as a trader, making profits in between. Because when you look at that simple graph we're looking at, you notice that even though it's a downtrend all through, we have small up movements,
oscillations as well.
And this strategy is not actually for long-term traders. Long-term traders can actually take this downtrend and go in from beginning to the end. But for day traders, for instance, you can't go in from beginning to the end. So what you are looking at is to take small profits in between. Okay, so that's basically what I will show us.
So who can make? You just mentioned that it's for short traders. What should they? What other factors can they look out for in terms of maybe opportunities to make more gains while the market is?
Yeah. For instance, right now there's a speculation that we expect that because the euro, the US dollar, has not been able to close below the 1.3 level. So we're expecting that if the euro is able to close below the 1.3 level, it's going to go in a downtrend. That's the kind of situation we're right now. Where price is going in a downtrend. And as a day trader, you want to take advantage of some of those, profits in between. Because my recommendation is that if price is actually a downtrend, you sell throughout. You don't buy at all. Find small opportunities to buy, but you don't buy. So, and when price is an uptrend, you buy throughout, basically.
Okay, so Michael, we need to take a break at this time. We'll come back to talk about and look at more of those trading strategies and tools that currency traders can use at the currency markets to maximize their gains. I've been talking to Michael Akinwale. He's a currencies analyst and trader at Forextime, and we're looking at different trading strategies that currency traders can use at the market. We'll be right back in a moment.
Our investments are really going down.
My chart reads otherwise, because I understand that laying the right foundation is the key to steady returns on investments, which is why I chose to attend training with Forextime. Forextime is one of the world's leading brokers in foreign currency trading. Forextime has given me an outstanding knowledge base for maximizing my investment returns. As a team, we can take advantage of Forextime training sessions and improve our position. Forextime organizes free training seminars 4 times a week, and their forward-thinking approach helps in equipping you every step of the way.
Welcome back. We're looking at trading strategies at the currencies market. Michael Akinwale is still here. Let's continue from where we left off, which is we looked at the Euro-USD chart. What chart are we looking at this time?
Okay, so now I've showed us the trend that's formed. So I want to show us how a trader can trade that simple moving average strategy of that downtrend. Okay. Now, if you look at this current chart we're looking at, the same Euro-USD daily, I have that green line you're looking at is a 15th simple moving average line, you know, on the daily chart. And what you want to do is that I actually only want to place sell trades or place sell orders when price is actually below the moving average lines. And I want to place buy orders when price is above the moving average lines.
Now, in very simple terms, what does it mean when price is below the moving average line?
What it means is that there is a lot of, let me use the word negative or sell trades going on.
Meaning that at that point, the trader should exit.
No, not exit, no. It means the trader should be selling.
Selling, right.
Because price is actually below the moving average. The moving average line is like a water line. It's like a rule or a guide used to guide you. I'm saying that if price is below that certain moving average, I want to sell. If price is above that simple moving average, I want to buy. So that's basically what we're looking at. We're looking at the 15 moving average line on a daily chart. So immediately price closed below that moving average, because that's what trader is. Not that price is below. Price should close below. Typical example, if you check USD right now, for like 3 days, it's been going to 1.3, goes below it and closes above it. Goes below 1.3 and closes above it. But we're expecting that if it close below the 1.3 right now, today, we're going to get Euro-USD really going down. So in the same way, when you have a moving average line, your chart, just like we're looking at, immediately price crosses below that moving average, then we begin to look for sell opportunities, you know, on that currency pair.
Now, what's affecting the markets most or more at this time? Is it the fundamental analysis, or what are traders looking for?
What we're looking at, we can say it's 80% technical. But at the same time, when you're trading technically, you still have to look at the news. Typical example, we expect that if price we expect a downtrend. But at the same time, if you go check it properly, price will actually be below our moving average. So it gives you a double confirmation on what price wants to do.
Okay, so for currencies traders such as yourself, what's happening on the street, particularly in the Eurozone, you always say that.
It's like a confirmation. Typical example, if you go check at this chart I'm showing you, if you go check at that exact time where price was crossing below that moving average, the fundamentals were telling us that the euro is weak. You understand? So that just confirms it's like a double confirmation of your strategy. It gives you evidence on whatever decision you're making.
Okay, so how can a trader combine using this particular strategy? Is it for a particular trader? You mentioned the one we talked about before for the day trader, the one who...
Yeah, this is traders.
Day traders.
A long-term trader will use it, but he might not need the other tool I'm about to show right now. You know, if a long-term trader, for instance, you can just tell yourself, if price crosses below move average, you sell. A long-term trader can just sell and go do whatever thing he needs to do and just be checking it once in a while. But for day traders, then you need the next tool I'm about to show you now.
Now, using this particular strategy, are there any risks that currency traders should look out for? Any downsides to it?
Now, when it comes to the matter of risk, every investment you're making, every trade you're making, there's a level of risk. And that's why I always recommend if you're trading, use a stop loss. No matter the trade, you need to have like a backup plan in case anything goes wrong, because sometimes things goes wrong. So most of the time, even if it works like 80% of the time, the 20% of the time when it does not work, you need to be able to manage the risk at that time, because that 20% can actually take 80%, of your profit sometimes.
Okay, let's move on. Let's look at the other.
So let's look at the next tool just to confirm our trades. Let's look at the next tool.
That's the euro.
The same currency pair, but what we're going to do is that we'll go to a lower time.
Okay.
We'll go to the 4-hour we're looking at the 50 moving average of the daily chart before. Now we'll go to a lower time frame, which is the 4-hour chart. Now, if you look at